Welcome to Looking at the Markets with David Model. If you are looking for a store of wealth, a store of value, a safe haven asset, and you're thinking maybe just keep your money in cash or hold on to bonds, treasuries, that kind of thing, I cannot tell you what to buy or what to sell or what to do with your money, but I would urge you to reconsider. I would consider precious metals, gold, silver, that kind of thing, as a much better store of value than the dollar, than U.S. bonds, that kind of thing. All right. And it really comes down to, well, there are a number of reasons, but one of the biggest ones, it's the I word, inflation. And I'm going to break it down for you. All right, let me explain. Here's a fact. $100,000 kept in cash since 1933 is now worth an inflation-adjusted $2,000. That's right. So imagine if you kept $100,000 in cash in 1933, with the ravages of inflation, that would now be worth $2,000. That's what its value would be now. Not too good. That same $100,000 kept in gold all this time would now be worth almost $5 million, $4.9 million. So you pick your choice. Which would you rather have? $5 million of inflation-adjusted value or $2,000? I think the choice is obvious. All right, let me break down my thinking here. If the government, and this is not an if, this is something that's happening, but if the government continues to print money to pay its debts, and we all know that the U.S. debt is in the trillions, of course, and what is the U.S. government doing about it? Well, one of the things it's doing is printing money, printing it faster and faster. And so since the government continues to print money to pay its debts, that leads to rising inflation when they just keep printing the money and devaluing it. So I expect inflation just to continue. Another reason inflation is going to continue is we've seen the price of oil going up recently. Well, the price of oil going up causes the price of many other things to go up. Because think about how many products that we buy depend on oil, depend on shipping, and that kind of thing. So that leads to rising inflation. Once again, when the price of so many things goes up because the price of oil is going up, that it devalues the dollar, it devalues, it makes things more expensive. That's rising inflation as well. I expect this to continue. So what does rising inflation lead to? Well, when you have rising inflation, the dollar goes down in value and precious metals go up in value, because when the dollar goes down in value, and keep in mind, the dollar lost 10% of its value in 2017 alone. If you just look at a chart of the dollar versus other world currencies, it has gone down quite a bit in the past several years. So, with rising inflation causes the dollar to go down in value, that tends to cause precious metals, gold, silver, etc., to go up in value because people don't view the dollar as a safe haven asset anymore, as a store of wealth, a store of value. So they move their capital out of dollars and into precious metals. Also, when the value of the dollar goes down versus other world currencies, then that means that the other world currencies go up in value compared to the dollar. And when other world currencies go up in value, what do they buy with that extra value? A lot of times they buy precious metals around the world. So again, precious metals going up in value is a very likely result of the devaluation of the dollar. Rising inflation also causes central banks to increase bond yields. Yeah, you see those rate hikes so that they can keep up with the inflation rate. All right, bond yields have to keep up with the rate of inflation. Otherwise, they wouldn't have any real value. People wouldn't buy bonds if they didn't keep up with the rate of inflation. And so when the inflation rate goes up, that tends to cause central banks, the Fed, for example, to increase the bond yields, which causes bond values, bond prices to go down, and in turn, precious metals values tend to go up in that environment. All right, and here's a great quote from Jim Rickards. It does the Fed no good to raise rates unless inflation is going up even faster, as we just discussed that. That's exactly when gold does its job of preserving wealth. And I totally agree with that. And let's look at a couple of charts here. All right, first, this is from macrotrends.net, and this is dollar versus the gold over the years, over time. And I'm going to pull it up here so you can see the years here, okay, going way back before 2000. And as you can see, the dollar and gold move inversely to each other. They move opposite to each other generally. Not every single day, okay? You might have a day or a week or a month when gold and the US dollar move together, but over time they tend to move in opposite directions. When one moves up, the other tends to move down. And so if you are like me and you believe that the US government is going to keep printing money and the dollar, the value of the dollar is just therefore going to keep going down, precious metals, again, over time, tend to move the opposite of the US dollar. So I think the conclusion is obvious from this. The last thing we need is to end up like Venezuela, for example, okay? And this is from goldsilver.com. I want to give credit where credit is due. This is the Venezuelan inflation rate. I'm not saying the U.S. is going to end up like Venezuela tomorrow necessarily or next week, but we can see what happens when inflation gets out of control. It can get out of control very, very quickly. And that's why there's a currency crisis, not just worldwide, but in places like Venezuela. And gradually it's happening in the United States. So what do? Do you keep your dollars just to have them suffer and have your the value of your account and your retirement account and your future suffer at the hands of inflation and at the hands of the central banks and what they're doing? Or do you protect yourself? Well, I say protect yourself. Again, I cannot tell you what to buy, what to sell, what to do. I just want to give you the facts so you can make decisions on your own. All right. So if you have any questions, if you'd like some help, putting together a trading plan or thinking about where to put your assets, how to protect yourself, you can contact me at any time. My name is David Moadel, and my email address is davidmoadel@gmail.com. If you like this video, please give it a thumbs up on YouTube and leave a comment. And please subscribe to my YouTube channel and hit that bell icon so you can receive updates on my latest videos. Thanks a lot. I appreciate it, and I'll talk to you again soon.